Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and today is Monday, September 13th. Hope everybody had a great day. First trading day of the week. Risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving any advice or recommendations. And if the screen is a little bit fuzzy, blurry, it's just because YouTube has not fully rendered the high definition version of the video, so just give it a little bit more time. So let's dig into the markets here. I'm a little bit more excited about today's price action. Whenever we have one of these market dips, it's a little bit, you kind of have to exercise some patience, not kind of get caught up too much in the first couple red candles, and just kind of start to check the boxes in terms of things that you want to see happen in the revolution of a market dip. Now, again, it's not a perfect science, and sometimes the dips or corrections are a little bit deeper than normal, but you just kind of go through that process of saying, okay, what are the support levels that we need to get to, and to figure out if we're going to bounce there. Is the sentiment washed out enough? Is there a little bit of fear in the market? And then we can get possibly a short-term bottom. So let's go through some of these levels that I watch using volume at price, and specifically the market webs indicator that we use to really look to see if there's any potential pivot points in the market. So first, let's look at the daily chart of the S&P. Again, we'll always start with the indices, and then there's definitely some bright spots that I want to go over in individual names. And again, I think that just kind of comes with just letting this play out a little bit. So before we even get to the S&P chart, keep in mind, we've got the seasonality, September, right? Everybody knows at this point, September's a weak month. Number two, we've got quadruple witching this week and options expiration. I'm more concerned about S&P rebalancing and NASDAQ rebalancing. Those, I think, if you look to see what some of the underperformers, some of the outperformers and the underperformers, you could tell that there's some names being pushed around. For example, you take two names, right, that are in the internet group, Snap and Pinterest, right? Well, Snap had really good earnings, and the performance has been better. It's been more of a winner, right? Even though it's kind of been dormant the last month or so. It's kind of been moving sideways. But this stock was down 4.3% today. Then you look at a name like Pins, which has been an underperformer, right? And so probably what happened, and again, this is not in every single case, but for the index rebalances, whether it's, there's a lot of moving parts. Most indices are market cap weighted. Some are also equally weighted. But what happens in terms of the index rebalance, right? They're footing things back to benchmark weights, meaning, right, some of the names that have been the underperformers and are staying in an index, right, they get reweighted back up, right? Because the variable that changes between now and the last quadruple witching, which was back in June, is price. So as price falls, more shares have to be bought. So that's kind of a good example. And I don't know all the dynamics. I don't know what indices, Pins and Snap are in, but there's a bunch of them, right? So for example, if you look at this, Pins was up 1.6% today. Now, again, unless I missed an upgrade or something to that effect, and maybe that had some type of impact too. But then you look at a name like Snap, it's down 4%. So again, my thought process on this is this has to do decently, and I've got like 5 other examples too, but I'm not going to waste time going through all the examples. But a lot of times the underperformers, maybe not every day of the week of quadruple witching, but they will outperform a little bit, just because they have to be bought, because they're the underperformers in the index, and they have to be reweighted up, and some of the really big outperformers have to be reweighted down, right, to match where their benchmark weight should be based on market cap, or another indices equally weighted. Right, I went over a couple examples of that in in the weekend member video, I specifically talked about the XRT ETF, right? The retail ETF is one of those that's equally weighted. So some of the losers in that, some of the underperformers have to be bought, and some of the outperformers have to be sold a little bit, right? So that's some of the rotation that we see among the other things. Another thing too is the one of the old Wall Street sayings for the Jewish holiday is sell Rosh Hashanah, which was about a week ago, and buy Yom Kippur, which I believe is tomorrow. So we're getting very close to that. So again, things kind of, then if we look at the S&P, what I would like to see, and let me just make sure I've got our labels turned on here. Nope, they're not. So let me turn these on. But like a couple really, really easy levels to watch. So we need to get back above value for the month, right? We got almost down to the 50-day moving average, and 44.77, or if you want to round up, 44.78. That would be a level that I would like to see for confirmation purposes that price gets back above. If we get back above 44.78, that gets us back above the 20-day moving average, which has been, important, right? Because most of the price action has been above there, as well as the 5-period moving average, right? So that's an important level for confirmation purposes. What I did see today, which was constructive, and what we highlighted pre-market, we also highlighted this in the weekend member video, was this downside VPOC that was at play down here. Right, 44.37. So if you're not familiar with this concept, virgin point of control is where a lot of buyers and sellers have previously met up before, and they sometimes act as pivot points. Right, so all you have to do is basically look at the 1-hour chart and look at some of the previous ones. Right, now a couple times, not last month, right? I guess it was last month. 2 of these were taken out, 1 and then 2, and then you saw the reversal on the second one, and then up we went. Similarly, back here in July, same thing. 1 was taken out, and then the second one. And, price does sometimes go a little bit further to the downside and then moves up. So is this too simple? Like, it might be, but I would watch the support level, right? And we did take it out, and we've got we had an intraday reversal off of that. So there are other levels below that, if we do get some weakness for something else hitting the market, there's a 5-minute, and when I look at the 5-minute chart, it's a little bit, it's less significant than I view the 1-hour chart or the daily chart, which I view more significant in terms of things. But there is one that's still there, 4430, and I actually thought that this one might get taken out too on the 5-minute time frame, which arose from back here all the way back here. Right, again, virgin point of control. It's when price does not pass through. Whoops, screen just jumped there. When price does not pass through a point of control for that period. All right, so that still remains, but these things, the closer that price gets to them, there's a magnetic force, right? Once we get away from these things, then you don't have to worry about it. And I think this is, now that we've kind of moved away from this, I don't think we have to worry about it, especially because we won't be below value most likely to start the day tomorrow. Right, that's when you have to worry about things when to the downside. If you're below value, then those things, then the virgin point of controls can come into play. When you're in value or above value, they're not active, right? So overall, I think that's good progress. Now again, what's the other phrase, like, Rome wasn't built in a day, but hey, this is something that I thought had to be taken out, and so I think that's good. I would love it if that's the reversal off of that, but I would definitely watch that 1 hour. The level that I mentioned here on the daily chart, which is 4478. Now let's just go back to this 1 hour chart for just a second, because the other point that I wanted to make here, and this is something that I talked about pre-market, was so we're not out of the woods yet, because the pattern has been, since we started to kind of move down last week, that we've been making lower highs. So for example, we've been bouncing. We got rejected right here at the bottom of value last week. Right, so this was last week's value area. Then we bounced again on Friday, and that was kind of a miserable Friday day because that's as far as we went. We bounced again in the overnight session, and then sellers kind of came in again. So we need to get out of this pattern of the lower highs, right? Lower high here, lower high here, lower high here. So again, we're talking about the super short term. We're on the 1 hour chart, but that's what I would like to see. And again, that level that I mentioned on the daily chart, if we get above that, that gets us out of the pattern of making lower highs. Okay, so I think that's a really good level to watch. We could look at the Qs, or we could look at now. Qs almost took out this VPOC, very close. So again, if we start to climb above this becomes less and less significant. Right, it gets more and more significant the closer that we get to it. Right, so we don't, they don't have to be taken out. They could be left for later. But the Qs which were weaker today held the 20-day moving average, and then IWM, right, also climbed back. Still a messy looking chart, right? Especially if you want to look at Russell futures, right? That Russell futures, speaking of virgin point of controls, right, we're talking about ones on the 1 hour chart. Well, look at this one that hit on the daily chart, right? And that's why, again, volume at price is so important, because I didn't see anybody putting that level on their charts, right? I mean, that really came into play. We got about above value for the month, and then we took this out, and then a fade began. So they're really important. I'm surprised, more people don't ask, or don't put them on the charts, considering, how many people that I saw putting out IWM charts of saying, hey, we could probably break this sideways pattern. And I'm like, well, we got to get over the VPOC first, because again, that's where overhead sellers have been. And we reverse right off of that. So this is a very messy looking chart to me. Again, I think that you want to wait, and this is probably one of those things that had to be taken out. But for now, this is not a great, unless you're day trading. If you're swing trading, or looking to do more type of position trading like that, this is this is not a good chart to focus on until it breaks one way or the other. All right, but still important to watch. So I mentioned in the beginning of the video rotations, right? Well, we definitely saw, a little bit of a rotation out of growth. Again, I think that's possibly has to do with either, quadruple witching, or just some people making some changes in their portfolios too, getting out of some growth names. We know that a lot of these growth names have really run up a lot, right? And we've been lacking participation in some of the reopening trades, right? So it's not a bad thing, in my opinion, to see that rotation out of some of those big winners. Let them come in and let them rest, and let some other areas participate, right? Let something like, so today was energy stocks, for example. XOP was up 4%, OIH was up 5%, right? So that's fine. I mean, that's really how the market is supposed to react, right? That is a very bullish market when you start to see certain groups rally, like the high growth have, software names, all kinds of other growth names, and profit taking in those groups, and then reallocating them into some other areas of the market, right? And then it goes back and forth, right? Once the growth names come in, they become more attractive, and then you see money go there as well, right? So that's there's nothing wrong with that type of market. And if you're open to other possibilities of not just super high growth, the reason why I bring that up is because when you read Twitter, right? Most people, the majority of people are just posting setups from super high growth, when that's just a slice of the market, right? So again, it doesn't mean you have to jump into and say, hey, I'm going to go into all value now. It just means you want to be open to kind of looking at the 20-day new high list, right? And see what's ticking up, see what sectors are starting to kind of creep up and seeing some rotate in. Because again, just because a company's in value, in terms of value versus growth, it doesn't mean that it's a bad company, right? So there's too many, negative connotations about value companies, or just, groups that are not super sexy. But hey, if you could make money, and that's what this year's been all about, in my opinion, right? Specifically, I made this, I talked about this weekend about, how even though this the SPY is up, let's see how much is the SPY up right now year to date. Right, it's up about 20% year to date. Right, you would think again, looking at that you would be like really happy with this with SPY, with the S&P being up 20%. But you know the ones that have been, the traders that have been open, and objective to seeing what's going on their screens, have done better than, small slices of the market, right? And again, I'm not saying anything negative about the ARK Innovation Fund or about, any of the managers there, but I'm just pointing out numbers that this is now down 3% year to date and underperformed again today. So making these adjustments and being flexible, right, and being objective, hopefully you've had a better year than that, than being down, 3%. Certainly we have at Tribeca Trade Group, and I talked about as well, before we get into, we'll get into the charts next of some single names, but I think it's a really good place right now. We're right around the middle of September. We've got, besides this month, you've got October, November, December, so 3.5 months. Think about where you are in terms of the year and what you want to achieve for the rest of 2021, and make that goal attainable. And then once you have that goal, how are you going to achieve that goal, right? It's not going to come by accident. It's not going to be, the market, it doesn't necessarily mean, because I don't think that this does this. The comparison that I made this weekend was that, sorry, or maybe not comparison's not the right word, but let's bring this up. Right, I think we're, if you look at what unfolded last year, right, this is last year's S&P chart, right? We had a decent move down, right? We had a little battle back, and then we did actually go south, and that's why you have to pay attention to levels, right? Because this was not the normal dip and then rally back last September, right? So that could happen, and you have to be open to all scenarios, right? We did rally back for a good couple weeks, and then we slid back and made a little bit of a lower high here, and then for the rest of the year it was very strong. So the point is, right, if this time does end up being rockier than the last couple months have been, make sure that you're adjusting to this and position the correct way for the rest of the year, because the rest of the year last year was very promising. So I think it's important to have those goals, and then how you're going to achieve them. Meaning, hey, if the market doesn't go straight up, how are you going to adjust for that, right? My goal is to be up around 65% for the year, right? I'm up over 40% now, and yeah, I mean, it's going to be, you're going to have to be very tactical in certain situations. Meaning, we come into the market's up 0.5% to open, should be taking profits around the open, right? And then, selling the rip a little bit while we're in a more difficult time period, right? So that's some strategy that I think that will kind of, whatever your goal is, to kind of help you achieve that, as long as it's an attainable goal for the rest of the year. But again, I think very important at this point to take a look at where you are, and if you're disappointed at where you are, got to just focus on the last 3 months, right? And work on being set up for next year, right? Because we start the new year in a few months, it's going to be completely, a whole new game, and trying to outperform for that year, right? So setting yourself up to have some confidence, right, for the next year is important, right? And not throwing Hail Marys here. That's my opinion. Again, I'm not giving out any advice or recommendations, but I would not be like, worrying about what you've done so far this year, right? Think about getting yourself towards the right place so that you're set up nicely, and maybe have some wins for the rest of the year. But I'm excited, and I'm motivated for the rest of the year, and I hope you are too. All right, so let's talk about a couple things that I thought really stood out. Right, this was something that stood out to me on Friday, was the semiconductors. They just had a really tough close, but they held the breakout area, which was above 271. So when we look across the space, and this was when we put together the weekend watch list, the semiconductors topped the list of names that I had. I was looking at names like, Owen Semiconductor, which had a nice day, up another 1.6 today. Marvell looks pretty good. Whoops. right? Marvell, remember, had earnings that I thought were pretty good. Just the market didn't there wasn't a great reaction. So it's kind of been building, since this. It gapped down, and it's trying to break out. So I think Marvell is a nice name to watch. AMD is another one too, where if you're more inclined to buy dips, right? I think this is going to be a little bit of a tougher trade, but I think this is ripe for a bounce. Right, and I'm okay with that. This for September, if I get, because I did position into this one late in the day, it held the bottom of value. It also got, almost came down to the 50-day moving average and bounced. But I like how this closed inside value, and I think after a number of red days, this thing is ripe for a bounce. For confirmation purposes, right? If you're not in this trade yet, set an alert at 105.11 and see if this thing can get into value for the week, right? Because it hasn't done that yet. All right, so I put on a little bit of a preemptive trade because I liked the hammer bar, and yeah, it made sense to me. All right, and another one too. If I didn't mention, sorry if I didn't mention this one, but Texas Instruments looks lovely too, right? This is finally, has some open space, and look at the sideways action here. So again, maybe a little bit of a slower name, but I like it. And there's nothing wrong right now in a difficult environment finding a slower name as long as it moves in the right direction. Applied Materials is getting there. This name has been so tricky. I tried trading it like once or twice in here, and since then I've just been watching it. I didn't try it on this last break just because I feel like I've gotten fooled in that one so many times. Also Taiwan Semiconductor. Now there's a virgin point of control up there at 127, but definitely looks like it's trying to finally turn and start heading back up a bit, right, for Taiwan Semiconductor. All right, so that was the group that I was, most interested in today. We got our target. If you watched some of our videos last week, or the post that I put out on Twitter about 27. So here's a good example of how to take a profit target using a VPOC, right? So this VPOC is all the way back here. This is the uranium ETF. Right, this group has been going, has been in fuego, so it gapped up to the VPOC. I took another target, and I've got the last piece on. Now I don't know if we'll get up to this 29 level. If I really start to see this fade back down, I'll probably dump the last portion of the trade. But this has been a nice winner in a very short amount of time. This is one of the first trades that I took. Here, 27.70, paid 24.88. Not bad for a couple days trade. DOCN was another name that I took a profit target in, acting very well. No dip in this space at all in this particular name. Up another 8% for the day. So nice one here that we caught for DOCN, and I've got the last portion of that trade on. I did bail on a couple trades. I didn't like how Nike looked. And I don't really like how Nike closed either, so I'll continue to watch it. But that's fine. I will always get rid of some of the names that look like they don't have the chance to come back. INMD, right? I've been, this has been a great name over the last couple quarters or so. And this thing kind of came into support 119.46, so definitely bought this one. I actually added a little bit of calls. It may take a few days for this to kind of build back up, but I love the fact that this thing held, touched the 50-day moving average and bounced off of it, and held above 119.46. A few other names in the growth space. MDB, this was a name I was talking about a lot in the weekend video about leaving yourself plenty of room for flexibility, having flexibility and being able to, if you position into a trade, take some off for profits. This was a trade I put on Friday. I took some profits up here, and we came back to kind of test the same level, and I re-added that target. Right, so here's me taking some profits, not huge positions, not huge profits. Right, 492, paid 485, and then I was able to buy this 474, and then got a target in this thing off that level. So 485, paid 47, 474, and I'm kind of back to where I started. I took off this XME also because it just didn't do what I wanted it to do, right? Which is break out, right? So I'll continue to monitor this one, see if it gets over value as well as the downtrend line. All right, so that is there. A few other names that I'm not in, but still acting very well is this Zoom Info, up 2.2%, bounced off the top of value 63.60. Not bad, considering what the averages did today, exhibiting some relative strength. Datadog was another one. Right. Actually finished down 1.4%, so it wasn't as strong. I was looking at this a little bit towards the end of the day, and I guess it gave back some of that bounce. Right. So this was a name I was in options. I got out of the options. I'm still in the stock. Right. I made some money on this move up last week, and I took my profits in the options. I'm still holding some stock, and I would like to hold the stock. We'll see if it can kind of get through this area and hopefully resolve higher. A couple other areas like First Solar kind of seems to be doing its own thing today. First Solar up 6.8%. It did take out this last version point of control, so will be interesting to see if it can continue with this momentum. What I don't particularly like, and maybe there's just momentum up to that VPOC for now, because if you look at the overall group, there wasn't a ton of names that were doing all that well. Now, there was some green, you had names like SPWR, which I want to bring up that chart next. A couple other ones too. CSIQ is up 3.7. These charts still look difficult to me. So for example, if you look at the solar ETF, it's right in the middle of the value area, which I don't particularly like. It just tells me that the stock is range bound. SPWR is kind of a messier, is also a messy chart. But if you have a longer term time horizon, putting on a trade here versus, maybe a $20 stop or $20.50, right? And maybe see where this thing goes for the long term, look for this to break above 23, 24 bucks. As long as you've got that stop in place, it's not the worst idea in the world. But I just think that this group needs more time to it. Last couple names, another one that was very strong today was Asan. Right, a little bit of a toppy looking candle there, got all the way up to 107. So congrats if you were holding this one. I would be taking some profits there. Upstart looks like that dip was bought from this morning. Got all the way down to 359. Closed at 259. If I said 3, that I apologize. And closed all the way up at 278, holding the 5-day moving average. Last one, GLBE. Also, we found support, bottom of value, 50-day moving average, and closed right around the highs. So again, a little bit of a tough, area right now because it's in value. You're going to have some resistance at 74, but still, that's $4 up. So, all in all, I'll leave it here because the video is already about 28 minutes long. I went on for a bit here in this video, but it is Monday, and I hope these videos help. So yeah, just take it day by day, I think, and scalping, taking some profits here and there in September, realizing what kind of market you're in, I think really helps. And, I hope that you guys set your goals for this year and have a plan to achieve them. All right, guys, have a great night, and I'll see you tomorrow.